Welcome, everyone. Thank you for joining this LinkedIn Live today for another educational session for people who own and manage commercial real estate. My name is Jeri Frank, and I'm co-founder and CEO of STRATAFOLIO. So we're a cloud-based software solution focused specifically on that small to mid-market commercial real estate owner. And our goal is to help these owners save both time and money on managing their commercial real estate portfolio. And so we are always looking for opportunities to help our customer base and our prospective customer base save money or reduce their risk. And today we are talking about reducing risk. So with us today is Brandon Buster and Micah Colbert from the Lee Agency. Brandon is the Director of Sales at Lee Agency and is a highly regarded problem solver. And with him is Micah Colbert. He's an insurance professional and a natural networker. And Brandon and Micah, we are really glad to have you here today to talk about insurance. And we actually met Micah at an EntreFest activity in Iowa City, networking. So networking really pays off, doesn't it? At STRATAFOLIO, we're always looking for these intersections. So this is an excellent topic for today. Today, what we will do is basically 20 minutes of Q&A between myself and you all. And then if we have questions from the audience, we will address those as well. So thank you so much for being here.
Oh, thanks for having us. We really appreciate it.
Yeah. Well, the very first question that I always like to kind of lay things out is, what are the top things that commercial real estate owners, people who own office, retail, shopping centers, industrial buildings, what are the top things that those people want to know? What are the most frequently asked questions?
That's a tough one. It's a great question. I think that at the end of the day, it's the property owners that are the ones with the questions. I find often there's two reasons people buy insurance, and one of them is because it's a requirement, and the other reason is because they're looking to truly protect their assets. So, but that kind of depends on who you're talking to, I suppose.
Mm-hmm. So when you
thoughts on that too, I mean,
yeah, it's really, there's myself personally, just to throw this out there for folks that may be listening. So I personally own and manage commercial and or residential, so mixed use properties. So it's kind of a side deal that I had. Our local community had a huge need for folks that could provide quality housing, quality office space. So I've been doing that just shy of 8 years. And coupling that, knowing insurance really, really well here at Lee Agency, it's just been kind of a natural fit for me to work with other property owners and managers. But it's really kind of two questions there, because you have a property owner that owns his or her property, and then they engage with the property manager and expect that property manager or, engage with them to manage that property correctly. And depending on how that's structured, is who's asking the questions and who ultimately at the end of the day is bearing that responsibility to protect that asset. And so the questions are, hey, my bank says I need it, as Micah mentioned. I have a multi-million-dollar asset, and bank says by loan covenants, I'm required to insure it. And or I have people that are renting from me, and I want to make sure that I'm covering from a liability if something were to happen and we get sued. So those are really the primary things that people are concerned about. And then they ultimately will partner with us and allow us to do what we do well, is to protect their assets the way they desire to be protected.
And when you are having, from your perspective, or if you're having initial conversations with someone who has a strip mall and they say, I have to have insurance. I just have to have insurance. They don't know necessarily what they need. How do you advise them?
Yeah, there's a lot of questions involved. I don't like the idea of trying to go in and tell someone what they need. We may have an idea just because of our experience, but at the end of the day, I mean, we're really there to understand, hey, what do you want? What do you need? And maybe asking some of the harder questions of, what are you afraid of? What keeps you up at night? What are you expecting insurance to do for you in case of the unimaginable or the incident that happens? What really is your exposure? Do you really own the buildings, or is it a 50-50 partnership, or who's managing those properties for you? There's a lot of questions, and as Brandon's talked a lot about, it depends on each scenario. I mean, each client, each scenario is going to have a total different set of challenges and a different set of answers to that.
So go ahead. I was just going to say at the very least, what would you, at the very least, what would you say someone has to walk out with?
Well, the topic is risk tolerance. So we're all tolerant or, you know, of various things. So it's trying to understand, let's say we're talking with a property owner. So I have a client that owns strip malls in multiple states, right? And we got connected through networking, as you mentioned, and that's really the power of our net worth is our network. And so, you know, he entrusts me and says, hey, I'm buying a new property. Okay, what are the covenants? What state is it in? Are there any state insurance requirements that you're aware of? And quite honestly, most property owners don't have a clue.
Right.
You know, they're saying, hey, I'm looking at a property, it cash flows, you know, I can get it at this, my rents are here. And they're looking at it from a strictly business perspective, right? Because that's what they're really good at. And that's how they continue to grow and maintain their portfolio. And so for us, it's saying, okay, are you engaged in any contracts today? So do you have a contract with a bank or, you know, a loan, a covenant? Are you in a management agreement with a management company? Okay, what's that agreement look like? What insurance covenants are in there? So at a bare minimum, we want to go to those contracts and we want to help you understand what you agreed to by signing that contract and look at those insurance requirements and say, do you understand what is expected of you by this contract? Well, what do you mean? Well, you got to have a minimum of 1 million per occurrence on your liability. You got to have a minimum of 3 million in excess. You know, you have to have this. There's language in there, you know, to waiver of subrogation, hold harmless agreements. So there are things that are kind of boilerplate that attorneys will put into contracts. And quite honestly, most owners and or managers don't really know what that means of them. That's kind of our job. And that's how we partner. So it's first bare bones to answer your question is what contracts do you have, if any? And please allow us the opportunity to review those so we can understand what you're, you know, adhered to there and know that we have the proper protection in place or make the appropriate recommendations and help you understand and quantify the cost to be in compliance.
So when you say contracts are in place, obviously the first one that everyone's thinking about is the loan or the lien on the property. What other contracts would you consider as a part of that contract question?
Sure. So I would say one example, let's say we're in a mixed use and we have a lease agreement. Well, all lease agreements should be whether it's commercial or residential, but what does it say in there? What are the responsibilities of you as a landlord or owner or manager? And what are the responsibilities of the tenant? So that's one contract that we'd want to review. And we want to make sure that it's not one-sided, but yet you need to protect your interests and make sure that who you're leasing or renting to understands what's expected of them and their income. You know, secondly, you may hire a contractor to do routine maintenance or preventive maintenance, you know, PM schedule. You may hire a landscaping company to maintain the grounds. So all of those, in my opinion, should be under contract. There should be a very explicit rights and responsibilities and expectation. So if and when it hits the fan, we know who's bearing the responsibility to that incident or that occurrence. And then we can act appropriately to mitigate, you know, future damage or pay appropriately where the exposure is.
So if I could summarize this, when you're sitting down to engage with a client immediately, the first thing you're going to need is the loan, any lease agreements for the space that you're responsible for, any service provider contracts, potentially also if they have signed any sort of investor part agreements. Is that pretty much the combination of things that you would need to look at?
I would say for the best interest of a client of ours, yeah, absolutely. You know, having a good understanding of what the insurable interest or what is actually there or what's being required of our client is doing our clients a favor, making sure that they're, if they decide to not uphold their lease agreement, or if they decide to not, you know, have proper coverages that have been found on a contract, well, then they can make that decision as the owner, but at least
Right.
we can have that conversation to say, hey, you're not in compliance here. You need to understand that. So absolutely. I mean, I think that that's an important step to be able to understand, at least for a property owner to be able to say, hey, where do I stand? You know, what is my insurance really doing for me?
And Jeri, I would say we don't need that stuff. I mean, quite honestly, we don't need it. We ask for it because it allows us to best do our job and best protect the exposure and the interest of our clients. And you know, you mentioned ownership structure. Some of these deals, you know, attorneys will have an opco. They'll put a propco. You know, they'll have you know, every building has a separate propco, but they're all owned and operated underneath, you know, the same entity. And so understanding that kind of org chart or that ownership interest, so then we can see, I mean, they're silent partners, right? We got 30 investors that each put $500,000, and there should be an agreement there so they understand how they're going to get paid and compensated. But I'll tell you, plaintiff attorneys are very, very savvy. And if and when there's a claim, they will go to the far reaches to list and name everyone that they believe has a possible interest to that entity, because they're looking for deep pockets. And again, this is not a bash. This is just being very open in the claims that we've seen and how we've helped, you know, support our clients through those litigation in a potential scenario.
Really, when it comes down to it, then if that owner is able to provide a comprehensive set of all contracts, all interested parties, it allows you to do your job to the best of your ability so that you can make recommendations. It doesn't mean that that client needs to take all the recommendations, because it is balancing out risk and understanding just how exposed you are as an owner.
Sure. And you know, one of the biggest, most stringent contracts I've seen is HUD. You know, so a lot of owners of property will go to HUD, bridge to the permanent. They'll look at those pretty extensive loan packages, but there are very stringent insurance requirements for some obvious reasons. But helping folks understand, you may save 2 or 3 percentage points. You may be able to amortize out to 40 years, but understand that there's additional cost component to being in compliance with those.
So how does someone know if they're truly properly covered?
I guess that it really comes down to what are the relationships, and we talked a bit about networking earlier. You know, I strongly believe that people do business with people they know, like, and trust. So how do you know that you're truly properly covered? I think it's finding somebody who's good at what they do, trusting them, and letting them do their job. You know, working with them, a true partnership, I think, is probably your best bet at knowing that you're truly covered. I don't know if that answers your question. It's maybe a little beaten around the bush, but you know, unless you're a complete insurance expert or truly understand all the depths and are able to go through that yourself and have the time to do that yourself, I think it would be really challenging to do that on your own without having a partner to help you do it.
Right.
Jeri, I would say, you know, not all carriers offer the same coverage, and not all policies are the same. So some people say, hey, I'm with XYZ insurance carrier. Brandon or Micah, I think you seem like a good dude. You seem like you know what you're talking about. Hey, here's my policy, and go try to save me some money or go match this. Well, you can't always match simply because, you know, there's just way too much going on. So ISO, which is the Insurance Services Office, has a standard that insurance companies have to go by. But again, that's the standard. And then each individual insurance carrier is looking for their, you know, value proposition. So they'll add certain endorsements. And so not only having a trusted advisor or an insurance agent that knows his or her stuff really, really well, but also understand the carrier partners that they have, because not all insurance carriers really desire and know how to properly insure multifamily mixed use portfolios. They just don't.
Yeah. What are the different types of coverages that you see most frequently in the commercial real estate market?
It's a great question. I mean, you pretty much always see property. I mean, you know, you've got your buildings, and a lot of times there'll be maybe a unit that's used for storage of some business personal property, just kind of more loose items. So, you know, you see property coverages. You know, you often see different liability coverages depending on, you know, what all exposures that specific client might have. You know, you've got your properties, your liabilities, and then if they've got employees, then federally you're required to have workers' compensation. It's a pretty broad answer to that, but really it's your properties, your liabilities, and workers' compensation if it's applicable. Brandon being a property owner himself, you know, do you have any specific coverages that you're typically seeing out on your properties that are unique or that maybe get missed sometimes?
Yeah, I would say, you know, given the scope of this conversation, you know, there's also management liability, right? So I'm an owner. I own a property. I engage with a management company. You know, that management company is acting on my behalf and managing my property, as an example, but they have liability for the interest. So let's say they decide to lease to a tenant, but they didn't do a thorough background check on the tenant. They didn't do their due diligence in making sure they have a qualified, appropriate tenant in my building, and they screw up. Your standard insurance coverage is not going to protect that management company or his or her actions that caused an issue. Our coverage that we'd have on the property and the liability would probably exclude that. So there's management liability to protect the interest of that management company for their actions on behalf of our. So that's another area. There's auto liability. If they have their employees that are using vehicles in reference to the business, they could be using their own vehicle but get in an accident while working, and so there's pollution depending on the what's happening inside the building. Are we leasing a space to a dynamite manufacturer? Now again, keep in mind that the tenant should bear his or her responsibility and have insurance to cover their business, but we can also then want to make sure that we're getting an afforded protection on their policy for their negligence versus just asking our policy to protect our interests, if that makes sense. So there's quite a few endorsements that aren't typical on that standard policy. One, as an example, is underground pipes. So I had an underground pipe collapse on one of my properties, and typical policy doesn't protect that. But thankfully, I know enough. I had an endorsement on there. So that endorsement's going to pay for a company, a plumbing contractor, to come out and dig it up, tie it back into the main, button it back up. There's also loss of rents or loss of business income. If we have to evacuate, we have to move tenants to another location while we fix, repair, or replace the damage that was caused on the building. So those are some of the coverages that I believe are very, very important, but not all policies will afford that without endorsing it to that policy.
Yeah, and I imagine not every insurance agent is going to bring up the list of things that they could do. And, I had no idea that was a potential add-on that could, or as you referred to it, an endorsement. Yeah, I had no idea that existed. But it might be the case that you, knowing the age of the building and other things about it, you thought of this other list of things that owner might want to consider.
Yeah.
So,
Jeri, you're I'm sure familiar. Was that last year, the derecho? I think it was
2020, 2 years ago.
Was it August 10th of 2020 or something like that?
Yeah,
right?
it is.
So
it is today.
Property all over the country, but we have a high concentration in Iowa, as we're an Iowa-based company, right? So utility lines, power sources going to buildings above ground, underground. A lot of those are not on your standard policy, but you endorse those, and you can endorse it to specific limits. So under, backup generators, things of that nature. Understanding when you're insuring property that has people in it, that those live bodies, you have a lot more to cover than just your building. You're also responsible in some cases for the lives of those individuals and what may happen that causes injury or, quite frankly, unfortunately, death in some cases. And do we have the proper protection if and when that exposure happens?
Right. Yeah, this is the 2-year anniversary of that monumental derecho event in Iowa. What is an additional insured, and why does that matter?
Additional insured, we insurance folk call it AI, but additional insured. So there's different types of additional insureds, but just kind of an easy way to look at it is that it offers coverage for that listed insured. So if you add someone, or if you add an AI, an additional insured to your policy, whatever the name is, whether it's a person or even an entity, it offers or has available coverage underneath the policy of which it was listed on for that entity. So, you know, if there's if someone requires in a contract, for example, to be listed as an additional insured, then you have to add that individual as a additional insured, and then there could be potential coverages for that person under that policy.
Okay.
Jeri, I'll take a little different angle because Micah is absolutely correct. But there's an insurance policy as a contract, right? And it's a first party contract. So property damage, we insure the property gets damaged, you have a first party loss to the first named insured, insurance carrier pays that first named insured, that first party, for his or her loss, right? You pay your deductible and you get the rest, you know, basically up to policy limits paid. So we have a building, we have a restaurant that's renting our building, okay? We, by contract, tell that restaurant that they're responsible to insure their business for the exposure that they have inside our building. And we ask them to list us, the owner, as an additional insured. In the event that that building gets burned down, someone gets injured, they file suit to the restaurant. They list us on that suit as well because we're the owner and they're assuming we have some level of responsibility. But we're a third party at that point, right? First party affords coverage to the restaurant. Third party, as an additional insured, affords us, property owner, to get coverage from that policy if we're named in a suit due to the negligence of the first party. So it's first party, third party. Additional insured status provides coverage to third party due to the negligence of first party. But there has to be what's called an insurable interest in order for that third party to be listed and afford.
Okay, very good. What are some examples of claims coverage?
So examples of like a claim scenario?
Yeah.
Okay, so the underground pipe was one example I just shared with you.
Okay.
You know, here's a very real, not that that wasn't real, because that happened to me personally, my rental business, but here's a real scenario. We insured a very large multi-story building in a builder's risk. So builder's risk is another type of insurance coverage that provides property coverage for hard and soft costs while the building's being constructed or under extensive renovation. Okay, so which is, I think, applicable to this conversation.
Yeah,
to those
very
folks
much so.
that may be looking at building or, you know, extensive renovation. If they, you know, do a change of use, you know, we have a contractor that buys a lot of old historic buildings and then renovates them for multi mixed use habitational and storefront, you know, kind of downtown river. Anyways, so we had a builder's risk. We're insuring that structure in a downtown area, multi-story. Had the insurance company come out, they inspected it, gave us their red stamp. We converted it from a builder's risk to a permanent policy because it was over 90% completed. Insurance carrier on site said, yes, it meets it, do it. And a week and a half later, building burned to the ground.
Oh.
Yes. Unfortunately, the sprinkler system was complete, but it wasn't hooked up. Lost control agreed that there was a sprinkler system, didn't check to see if it was hooked up or not, but gave us a stamp of approval, and now we got a $12 million claim.
Wow.
So guess what happens when that happens? The insurance company or the adjuster goes to us and reviews and audits, making sure that we did our job correctly. The owner says, hey, Brandon, Micah, did we have enough coverage? So, back to saying, are we properly insured? Nobody ever says at time of loss that we had too much insurance.
I am sure that is the case. I can speak from my own experience there with the derecho.
And as you know, in the last 6 months to 18 months, material and labor costs have skyrocketed. Now the yield curve is starting to come back in favor of us, so to speak. But interest rates have jumped, here in the last 6-8 months. And so all of that stuff comes into play and into factor if and when there's a claim. Do we have it properly insured? There's some provisions on a policy that says if you don't have enough insurance, then the insurance carrier very subjectively can penalize you and not pay out as much if you don't have it properly covered.
Oh, interesting.
Yeah.
Well, we've hit some.
There's just one example of a potential claim and how it was handled.
Yeah, we've hit on a lot of topics. Is there anything that we haven't covered that you wanted to quick talk through?
I mean, there's a lot that we haven't covered, but not necessarily anything that I think really the encouragement is just find someone that you can have those one-on-one conversations with, kind of express, hey, here's what's keeping me up at night. Here are some of my pain points. Here are my questions, and find someone that you can really put the time aside and have that conversation with.
Right. I think what you're really trying to say is insurance is not a commodity. It is a relationship, and that is where you get the best value as an owner, when you can have a relationship partnership to make sure that you as an owner are adequately covered and that you both understand what each other is trying to do.
Well, hey, Jeri, I'll tell you, neither one of us wanted and desired to be an insurance agent. We each have a story of how we got into the business and the industry, but we have to take it very serious because our clients depend on us. You could ask anybody, do you know an insurance agent? And they're probably going to name 2 or 3 people that they know, because there's a lot of them out there. And, and there's a lot of what we call generalists, right? Someone, that you can go and they can insure anything that you have, but do they truly know and understand that industry? Do they have the carrier partners that know and understand that industry? Right. And, are you doing your due diligence in vetting out that agent or that broker and knowing that they have it? Are you getting references? Right. Are you talking to other people that work with them, that are in your space? And again, that seems like a lot of work, but it's not like buying a car where you want an next car. You go online, you do all the research. Now you go kind of wheel and deal and get the best price because that car is the exact same model with the exact same features. Insurance policies are not like that.
Right. Yeah, that's actually a good transition. I'm gonna share my screen and put your information up for everyone to see. But I also want to just take this moment to say, yes, Lee Agency's information is on the screen, so you can reach out to them individually. But if you want, you can also find Lee Agency's information on our website as well, because we do believe that Lee Agency and both Brandon and Micah are really good guys to work with from an insurance perspective. So please feel free to reach out to them. And thank you so much for being here today. And I did want to alert everyone that on September 7th, we will be talking with Scott Martin from Intelliglass, and they are a master systems integrator for commercial real estate. And they can autonomously manage office buildings 24/7. So we're going to talk through their state-of-the-art integration on AI cybersecurity. But until then, take care. And thank you so much, Brandon and Micah, for being a part of this conversation.
Sure, thank you.
Thank you.
Take care. Bye, all.